morning. Hello and welcome to Money Control's live stream. You're tuned into a fresh edition of Opening Bell with me, Lovisha Darad. Well, we are starting with a fresh week, and yes, it's a grand and an elongated one because we have the budget on the 1st of February, so just 5 more days to go. Not just this, this week we also have the US Federal Reserve's rate decision, US inflation reading later in the week, and also some mega cap earnings from the US on that front. So, plenty of activity which is expected to go around here. Volatile swings also could be high on the market as well, because last week also it was on the higher end as well. Even Trump's tariff plan will also be watched out, because first target is on Colombia as he issues 25% emergency tariffs after its president barred 2 US military planes carrying deported immigrants. But for today, the GIFT Nifty is pointing out to a very gap down start for the Indian markets. Even the pre-open rates are reflecting the similar pain point, a weak start for the Indian markets. This comes on the back of a largely mixed global handover. US futures that are down after last week's gains, and even Asian markets are off to a good start. Well, a majority of the Asian markets, Japan and the rest of the markets are also closed. Only Australia and Hong Kong markets are off to a good start at this point of time. On home front, Q3 earnings that will continue to dominate the market trends. So we will be keeping that on our radar too. So now, while you post your stock related queries on our live feed, let's first quickly take a look at the top headlines this hour. US stock futures trade lower after weekly gains as President Donald Trump threatened to impose retaliatory tariffs on Colombia. Investors also turned cautious ahead of the US Federal Reserve's rate decision and inflation reading due later this week. Asian markets start the day with modest gains, while the GIFT Nifty is pointing out to a lower start for the Indian markets. Oil prices remain under pressure as President Donald Trump's repeated call for OPEC to reduce prices. Brent crude prices hover around $77 per barrel. ICICI Bank reports a good set of earnings. Gross NPA ratio remains one of the best in 10 years, while quarterly slippages come in at 14-year high. JSW Steel also will react to its Q3 earnings as revenue and EBITDA per ton beat estimates. Some of the Q3 earnings which is due later today. Watch out for Tata Steel, Coal India as well as ACC. All right, if we look at the last session and take a recap of it, well, markets clocked third straight week of losses. Nifty closed below that 23,100 levels, and the next support we can be watching out to be placed around that 22,800 odd levels as well. Now this week, as I mentioned earlier, we have the budget and the FOMC meeting in focus. FOMC meeting particularly, traders largely expect the Fed to hold the rates steady this time at about 4.25 to 4.5% range as well. But from the budget point of view, we can see some of the capex themed stocks that will be in focus. So railways, defense, all of these keep on your radar ahead of the budget announcement on February 1st as well. This week, around 140 companies will be announcing their Q3 results. Some of the key players will be including like Bajaj Auto, IndusInd Bank, Tata Steel, all of them will be in focus. Today, most of the stocks like ICICI Bank, IDFC First Bank, Yes Bank, DLF, JK Cement, all of them will be reacting to their Q3 results. So keep those shares on your radar as well. Now, let's quickly take a look at how today's trade setup looks like. Well, first up on your screen is your option queues data. We can see that the Nifty put call ratio has fell to 0.84 levels from 0.94 levels in the previous session. So there is some cautiousness which is intact in the market. Remember, we have the monthly expiry this week too. So volatility is expected to remain on the higher end as well. The next on the screen is your F&O ban list. Well, no new additions, but the stocks that have been retained include the likes of Aditya Birla in fashion and retail, Bandhan Bank, Canfin Homes, Dixon Technologies, India Mart Intermesh, L&T Finance, Manappuram Finance, Mahanagar Gas and PNB. Now next on your screen is your fund flows data. Well, the FIIs have sold about 2750 crore rupees worth of Indian equities in the last session. So far this month also FIIs have sold about over 60,000 crore rupees from the FIIs front, and DIIs on the other hand, they have bought around 2400 crore rupees worth of Indian equities in the last session. Now just a couple of minutes before we go to the opening bell, but yes, so the pre-open rates are pointing out to a negative start for the Indian markets. Well, we have the budget on that front as well. But on that note, let's quickly get on board with our market expert, well, Kunal Rambhia. Kunal, good morning. So good to have you back.
With money control at risk with the market discussion.
Okay. Kunal, Nifty has been well below that its 200 EMA levels. This is the budget week. Do you expect this week to be highly volatile as well, just like mirroring the last week as well?
Absolutely. Going forward, we can expect the volatility to even increase because we have this entire week as, full of dramatic events coming up, right from ranging from US market events to domestic market events. So yes, but at the same time, indices are near to the support itself and the long-term trend still remains positive. So I expect, a decent bounce going forward from these levels.
Okay, all right. Kunal, any expectations you have from the union budget? How do you expect the markets to move on the day of the budget?
To be very honest, this budget is going to be more like a status quo, but at the same time, we have to be overall cautious because markets have been fairly discounting the events, right? So any negative announcement from here might just impact the domestic cash flow coming to the market. So I personally expect some kind of good capex announcements going forward on the budget. At the same time, sector-specific announcements are, always welcome. Like textile is expected to give some kind of benefits coming from the government and to the textile sector is something to watch out for, and large capex plans for the government going forward,
Okay, all
without
right.
twisting on the LTCG.
Okay, all right. But you mentioned that some capex related announcements will be watched out for. So how should investors trade capex related themes like railways, defense? Do you expect them or do you suggest them to accumulate at these levels?
See, again, as I mentioned in the beginning itself, right, that the markets are smart enough to discount the events actually, and we have
Yeah.
not seen any kind of buying emerging at this level. So rather than catching the falling knife, it's always better to wait for some bit of clarity. Even if we buy a little expensive from the lower level, it's absolutely fine. But let's wait for some clarity and then deploy the new capital. If already someone is holding the position, then it makes sense to hold with some kind of risk management in place. But fresh entry into the counters are supposed to be avoided at this level.
Okay, fresh entry to be avoided at this level. Kunal, quite mixed Q3 earnings so far from the banking names. Kotak was great, HDFC Bank was modest, ICICI Bank also showed some good numbers. But slippages have been one of the major concern for investors. So how should investors trade the Bank Nifty index at this point of time?
See, as far as the Bank Nifty is concerned, we have already seen a massive correction, right? And the index, which was trading near to 54,350, has come down to as low as 48,800. And at this point in time, when today we are seeing again a gap down of around 500 points, index is down by 12.5% from the high. But interesting observation is that Bank Nifty has not broken the consolidated zone area, and that's something which was on 13th Jan low, which is 47,900. We are opening right near to that level itself. So for now, 47,750 to watch out as a support. This correction can be taken as a good short-term buying opportunity from the investors. Again, we will not just buy on the first tick of the day. We'll wait for 15 minutes, the data to shape up, then the markets to stabilize. If the day's high is taken out after 9:30, I'll be the buyer with the days low as a stop loss. I think that can be a good short-term strategy for this week also and for the day also.
All right, just less than 10 seconds to go before we go to the opening bell. We would be watching out how the mid cap and small caps also fared today, because last session they were one of the major pain point and they closed in the red as well. And among the sectors, we had Nifty IT, which advanced for the third session. Let's see the opening rate. Well, it is below that 23,000 level, 22,925 first rates coming in for the Nifty 50 index. We can see the advanced decline ratio. Most of it is fairly towards the green, and market is observing and taking in the first rates as well. Nifty mid cap index, very sharp fall, down about 1% at this point of time. Sensex is also down by 500 points. at this point of time. So let's see how this pans out as well. Most of the majority of the market breadth is favoring towards the declines as well. Among the India WIX, the volatility index that has spiked up by 5% above that 17 odd levels. Among sectors, what is doing well, all of them have dipped into the red. We can see Nifty Auto Index down about 0.7%. We will be having the auto sales figures also, which will be rolling out from February 1st onwards as well. Nifty IT Index, after three straight gains, third straight week of gains, it is down about 1% in today's trading session. Bank Nifty Index also down about 7, seeing a cut of about 0.7%. Nifty Pharma Index seeing a cut of about 0.4%. So majority of the sectoral indices have dipped in the negative territory. Small cap and mid cap indices also seeing the pain, down about 1% each. For both the small cap and the mid cap indices. Let's see some of the top gainers on the Nifty 50. Well, Britannia, HUL, Dr. Reddy's Lab seeing gains. Britannia and HUL, well, both of them are seeing a gain of about 1%. HUL seeing a gain of about more than 0.5%. Shriram Finance doing well. Shriram also finance featuring among the top gainers on the Nifty 50. This comes on the back of the following its Q3 results. Well, brokerages are largely positive on the counter, so seeing a minute gain of about 0.3%. ICICI Bank, well, flat in the green at this point of time. But seeing okay, fine. Now as the rates are getting updated, 0.5% gain coming in for ICICI Bank after good set of numbers from the third quarter. On the other hand, conversely, if you look at the contrasting picture on the Nifty 50, well, Infosys seeing the top laggard at this point of time, seeing a cut of about 1%. Bharat Electronics cut of about 1% as well. Hindalco, Tata Motors, Axis Bank, all of them seeing a pain and down about 1% each as well. But let's take some stock in focus. That is your ICICI Bank, one of the top Nifty gainer as well. The lender did show some good numbers in the third quarter, where we saw NII was up 9% year on year, while net profit also surged by 15% year on year in the third quarter. Asset quality was largely stable, but there is an uptick in the number of slippages as well. This morning, brokerages have been largely bullish on the counter. We saw that the CLSA has shared an outperform call, Jefferies has also shared a buy call, and JP Morgan also remains overweight on the counter. Kunal, another steady quarter for ICICI Bank, as we were discussing about Bank Nifty Index as well, that it remains in the consolidation zone. Where do you see ICICI Bank go in the near term?
Believe me, again, if you look at the overall trend on the ICICI Bank, even for last 4 to 5 months, it was more or less sideways consolidation itself. And today it gap down open and it's recovering very quickly. Considering the low itself as a good stop loss, one can initiate a buy. 1190 to watch out as a strong support. If ICICI Banks falls below 1190, this entire long-term view might just come to an end. But otherwise, this can be the good level to initiate the buy. Near-term targets on this can be 1250 to 1265.
Okay, 1250 to 1265. Let's take another stock in focus. That is your IDFC First Bank, down about 5% at this point of time. The lender did see a profit which saw a sharp fall of about 53% year on year in the third quarter, while NII that has risen by 14%, and margins also have contracted in the third quarter. After their Q3 numbers, Jefferies have shared a buy call on the counter, but still the brokerage firm believes that the MFI will continue to drag the earnings, and they expect to see the pain continuing for another 2 to 3 quarters. Kunal, IDFC First Bank on the charts hasn't been a good performer past 6 months. So should we expect the stock to experience more selling pressure down the line?
So in fact, Lovisha, if you look at the historical data from September 2023, this counter is in downtrend. And it's down by around 45% from the peak of around 100. It's trading right now at 59. But now it's reaching near the previous bottom of April 2023, and that level is around 54. So from here on, the risk reward ratio actually goes in the favor of longs. But again, as we discussed, for the other counters also, let's not catch the falling knife. Let it settle down somewhere near 53, 54 levels. If it consolidates and then if it starts the uptick, that can be the good level to initiate the buy. So for now, wait and watch scenario. The level to keep in mind is around of 55 levels. If the counter reaches near 55, we will reinitiate. We'll just give a look at the counter at that point in time. But for now, let's avoid this counter.
Okay, all right. Wait and watch for 55 levels for IDFC. Let's go to another stock in focus, that is your Interglobe Aviation. In an otherwise weak market, the stock is doing well, up about more than 0.5% at this point of time. Well, the airline operator did see profit falling about 18% year on year in the third quarter. However, the revenue surged by 14% year on year and margins have also sharply contracted. Kunal, after last week of December, the stock is down. And it has been on a downward spiral as well. Do you expect the stock to rebound in the near term? Today the stock is doing well.
Correct. So again, April 2024, this counter entered into all-time high territory, and that level was 3,915. And from there, it went up to as high as 5,000. It declined again. Now, this entire data of last almost 10 months is suggesting a strong support near 3,950. And in fact, just a couple of days back itself, it bounced from 3,950 itself. So yes, it's near to that lower territory of the channel formation. So considering that as a stop loss, one can initiate a buy. On the higher side, we can expect the resistance near 4,700, which can be a good short-term target also. So with the stop of 3,950, one can definitely buy this counter, and the targets can be 4,650 to 4,700. Mind you, volatility is very high, so one needs to keep trailing the stop loss, as the position turns favorable.
Okay, all right. Let's move on to another stock in focus, that is your JK Cement. Well, the stock is seeing nearly half a percent gains. This comes on the back of net profit declining by 33% year on year, while revenue has also slipped and margins have also contracted sharply by 450 basis points. That aside, the company did enter into a joint venture with Kashmir's Safco Cement. Kunal, the entire cement space is going through an overhaul. So, where do you see the shares of JK Cement go? The stock has been doing well despite quite a tepid Q3 performance.
Believe me, the entire cement sector is looking very attractive, and it's an investment bet for next 3 to 4 years. The sector is looking very attractive to me. As far as the JK Cement is concerned, it's an absolutely trending counter. Though we saw some kind of sideways consolidation since last 4 months, counter which was trading at 4,900 came down to as low as 4,000, but right from the support level, it bounced and back to 4,850. So for the new entry, I would say let's wait for some time. If the counter manages to give a breakout above 4,900, then with the momentum trade, one can take up this position. Or by any chance we see a decline near 4,400, I think that can be the good level to initiate buy from the long-term risk-reward point of view. So for now, let's wait. It's near to the resistance level of September 2024, 4,900. So avoid this counter for now. But by any chance, if it manages to close above 4,800, 850 kind of levels, one can definitely initiate a buy.
Okay, all right. Let's quickly get to our query segment. We have been, all our market participants and viewers have been lining up our queries. So the first query coming in from Naveen, he's asking the view on about Wipro as a stock. Wipro, what do you think, Kunal? Because the stock has been doing well after its solid Q3 performance as well, and even their Q4 revenue guidance have been like -1 to 1% growth that they are expecting the company.
The entire IT pack is the outperforming pack right now, and now FMCG is also picking up. So in IT, I think all the counters are doing excellent. TCS is doing equally good. Wipro is just, it's near to the high. So if our viewer is already holding this position, I think he should be comfortable holding these kind of winners in such kind of markets. Trailing stop loss for now on this counter is 305. Keep that level in mind. By any chance, if that level is bridged on the lower side, revisit money control and ask someone who is available at that point in time. Otherwise, if you're a positional trader and if you like to follow the trend, this is the counter which you must be holding on in your portfolio. The in-house target for this counter is around 350 to 355. So with this, we are also holding on to this position.
Okay, 350 to 355. A strong commentary coming in for Wipro. Naveen is also asking the view on First Solutions, Kunal. Past 6 months, the stock has been showing good trends. Can we expect the bullish momentum to continue?
So I'm just finding out this counter. Let's take up the another one. Once I get the chart, I'll just share the view.
All right, sure. Let's move on to another viewer query. Well, Rajiv Mitra is asking, any hope of positive move in LIC in the next 1 month horizon? Well, LIC did see premiums dropping in the month of December, Kunal. What can we expect? The stock has also been downward in a downward spiral past 6 months. Can we expect some optimism to come in the next 1 month?
See, it's been a year. This counter was actually in positive trend, and then September onwards, it started declining along with the other counters. But just going back and checking January 2024 levels, counter was near to 820. It's back to the same level itself, and it's been last 15 days. Counter is consolidating near 820. That's a very positive sign. So, if our viewer is willing to take up the momentum trade, then wait for the breakout of 870. I think above 870, it will show us the double bottom formation kind of, on the chart. Considering that, one can initiate a buy. But if he's already holding the position, then in that case, keep the stop loss of 805. If the counter manages to close below 805, it's an exit. Otherwise, this can be good level to keep a watch on it. By any chance, if the counter manages to go above 870, one can initiate fresh entry also into this.
Okay, fresh entry after 870 as you're suggesting. Well, let's move on to another view query. Alex is asking the view on APL Apollo Tubes. How does the counter look like? Because, third quarter results have been quite solid. Net profit up about 30%, revenue also up about 31% in the third quarter. What can we expect going forward?
See, this counter has not done much since 2023. Just
Right.
in 2023, the bottom was 1,400. And on the higher side, we saw the consistent resistance coming near 1,800 levels. So, yeah, if you're a long-term investor and if you're comfortable holding a kind of, minor underperformance on this counter, it's a must-hold stock in your portfolio. But if the counter breaks this 1,300 mark decisively on the lower side, then I think the view might just change. Otherwise, it's a trending counter. A bit of sideways consolidation of a year or two should not really bother the positional traders in the market. So for now, it's a hold if you're a long-term investor. Otherwise, take an exit and reinitiate a buy above 1700 mark.
Okay, all right. Hold on the counter for APL Apollo Tubes. Let's move on to another viewer query. Well, the Satya is asking, please check the short-term outlook on GNFC and GSFC. Well, fertilizer stocks in focus ahead of the budget, Kunal, but past 6 months, both of these counters have been underperformers, down about 20% as well. Where can we expect the stock to go?
So Gujarat Narmada Valley, now this counter is again holding on to the support levels of 512 since February 2022. It's again been sideways consolidating counter 512 on the lower side, and on the higher side we see 800 as a strong resistance. Because the counter is near the support, it makes sense to hold on to GNFC right now. At the same time, GSFC, Gujarat State Fertilizer, is also sideways consolidating counter. I'm personally very bullish because we initiated a buy somewhere in the month of December 2023 on the breakout of 195. Mind you, this counter went up to as high as 300, again came back to the same level, but the trend is still positive. Because we are trend followers, we love this counter. With the stop loss of 190, one can definitely hold on to this counter. By any chance, if it gives a closing below 190, it's an exit. But otherwise, this can be good level to initiate buy. Momentum will pick up probably about 215 to 220. And in that case, we can expect the targets of 275 to 280 also. But for now, it's a hold on both the counters.
Okay, hold on both the counters for GNFC and GSFC. Well, let's move on to another viewer query. Well, Kishore is asking his view on two PSU lenders, that is your Union Bank and Canara Bank. Well, Kunal, how does the stock look like? Past 6 months, again, underperformers, but in the run-up the budget, can we expect some limelight to gather?
Yeah, very much possible. But at the same time, these counters are not doing much. As you rightly mentioned, 6 months of underperformance. Let me tell you, it's been almost a year. These counters have not done much. So, though I also expect, some kind of positive momentum to pick up, because in this entire correction, the interesting observation is that there is no volume selling or happening on the counters. The kind of buying which we saw in 2024, beginning of 2024, such kind of selling volumes are not on the chart. So I'm also optimistic, but I'm waiting for the momentum to pick up. So for now, let's avoid, rather than buying just on the anticipation of positive announcements on the budget front. Let's wait for the momentum to pick up. If the momentum picks up, and even if the counter goes up by 10% from the present level, we are still off by around 50% from the highs. So let's wait for the momentum to pick up and then initiate the buy. The preferred bet are Ken Bank, Bank of India, and IOB from my side. Union Bank can also be seen with the stop of 100 rupees.
Okay, all right. Any targets for Canara Bank? Because he did ask about Canara Bank as well, and you mentioned that it is one of your favorite picks.
Correct. So on the Ken Bank front, so the support is 93, and the short-term targets can be 110. And above that, it can be a complete trend reversal of the entire 1 year downtrend. So let's watch out for this also.
All right. Since we are talking about budget, well, we have another viewer query on Satvika. She's asking about Titagarh Railways. Well, how does the stock look like on the charts? Past 1 month, seeing a sharp fall about 18%, and even 6 months, 44% downside.
It's too much on the upside, honestly, being done on these kind of counters. The worst part of this is that the support is still far away. The support on the chart, on the weekly chart, is around 850. Right now, it's trading at 930. Short term, I think the major support which was on the chart at around 1050 is also broken. So be a little cautious rather than just holding on to it. Take an exit for now. What if after our exit, if the counter goes up? In that case, reinitiate a buy above 985 levels. This can be the good strategy for now. And by any chance, if you see the counters coming down near 850, I think that can be good level to initiate a buy. Today, in today's trade, it's looking like a gap down and a continuation. I would always prefer to take an exit as early as possible from such counters.
Okay, all right, exit at this point of time. But let's move on to another viewer query. Well, that is coming in for Rainbow Child. Anune is asking about Rainbow Child, and he's bought the shares at 1600 rupees, and he's asking whether he should average or exit for the 6 months to 1 year view. He's seeing quite a bit of a loss at this point of time. Kunal, what should he do? Should he exit, or should he hold on for the counter?
Just counter is down by, I think, around 10-11% from our viewers buying. That should not be the good level to think of averaging out. In fact, in today's trade, it has gap down open, but it's recovered sharply also. At the same time, the trend is very positive. If you look at the last 2.5 years trend, it's absolutely positive. Consider good support as 1325. If the counter stays above 1325, that can be, that can be considered as a buying opportunity. Let's not average for now. I mean, just the 10% down from the buying. It's not much of a decline also, right? So trending counter, hold on to it with the stop loss of around 1320 for now. If the counter goes below 1320, we'll revisit and we'll see how the things are shaping up. But for now, it's a clear hold.
Okay, a clear hold for Rainbow Child. Well, let's move on to another viewer query. That is your Anune. Anune is asking his view on Zentech, and he's bought the shares at 1991 rupees, and he's asking the view for the 6 months. Well, he's seeing again quite a bit of a loss. What should he do? Because even if we look at past 1 month performance, the stock is down about 27%.
It's a linear decline. Yeah, I agree. And the trend is turned negative even in the short term. But again, September 2023 to November 2023, that zone was near to 1650, and now counter is reaching near that zone. I think 1650 can be a good and a strong support. If the counter manages to fall below 1650, it's a clear exit without any further argument on that. But because viewer has already held on to the position for now, I think he can still hold on for some more time. 1650 can be good level to think of averaging out also, and we'll see at that time how the things shape up on the chart. But I think for now, hold on with the stop of 1650.
All right, 1650, hold on to the stock. Let's move on to another viewer query. That is your Thi Gopinathan is asking on the view on Suzlon Energy. Suzlon Energy down about 21% past 6 months. It's trading about that 50 odd levels, and we did see a 52-week high of 86, and now it's down to 50 at this point of time. Where can we expect the stock to go in the near term, Kunal?
Honestly, that entire rally itself was very scary, but unfortunately, and then eventually after that, we saw the decline coming in. Now it's making lower top, lower bottom. The strong support on the chart was 55. Now this 55 is also broken. Counter is near to 50.60. I think it's a clear exit for now. By any chance, if the counter reclaims the level of 55, one can reinitiate the buy with the recently made bottom as a stop loss. Assuming today itself it recovers, then today's whatever is a low can be considered as a good stop to initiate buy above 55. But for now, it's a clear exit.
Okay, it's a clear exit for Suzlon Energy. Well, let's move on to another viewer query. That is Ashwini Balaji is asking whether or not we can accumulate Natco Pharma at this level, or should we wait? Natco Pharma, today the stock has not been doing well, down about 2%. Past 6 months also the stock has been an underperformer, Kunal. What should he do? Should he accumulate at this level?
So the strong support on the chart is near to 1150 to 1175. Let's wait for the counter to reach that level because the trend is absolutely down even for the medium term. So wait for that level to come, revisit a channel at that point in time, ask someone who is available. I think 1150 to 1175 can be good level to accumulate, not as of now.
Let's take another stock in focus. It is buzzing in trade today. Well, that is your DLF, up about 2% at this point of time. The company did post good bottom line figures as well, but their operating profit has taken a hit. Kunal, the stock is traded well above that 800 odd levels, but it slipped below 700 odd levels in the previous session. Today it's back above 700. What can you expect in the near term? Can we expect a rebound, a possible meaningful recovery to take place?
So entire year of 2024 counter tested 710 mark almost three times. Recently, it broke that level, and in today's trade, it has reclaimed that level. Now, this is the first trade of our in-house trade itself. That we already initiated a buy in the morning itself. The stop for this is 690. So I'm just sharing that view with everyone. 690 can be the good stop. One can initiate a buy on this. Condition is that the closing should be near the high. If the closing is near the high, one can hold on to the position, and the targets in that case can be 775 to 780. And if someone is just willing to, buy the position for the long term, then let's avoid this counter for now. But for momentum, I think one can initiate a buy with the stop of 690.
Okay, 690 at this point of time. Let's take another stock in focus. That is your Godrej Consumer. That the company did post a tepid Q3 performance. We saw that the company's net profit fall by 14% year on year, and even the margins saw a very sharp fall of about 290 basis points. Kunal, how should traders trade the FMCG basket, as a whole ahead of the budget, and how does Godrej Consumer as a stock look like?
So honestly, Godrej, I don't find any nearest support even on the weekly chart. I think the earliest support on the chart is near 1000 levels. So I'm just clearly avoiding this counter. If someone wants to play from the budget point of view, I think HUL is well placed. It's near to the extreme support with the stop of 2300. One can always accumulate this counter. I think if the momentum picks up, the first target can be 2500 followed by 2650. We are very bullish on HUL because it's offering us the best risk reward ratio in the entire FMCG pack. So yeah, HUL is a clear thumbs up. Avoid Godrej Consumer for now.
All right, avoid Godrej Consumer for now. Let's take another stock, which is your Yes Bank. Well, the stock has been, up about 2%. We also have a viewer query. Kat has been asking the view on Yes Bank. How does the stock look like on the charts, Kunal, followed by the Q3 results as well?
From the August 2021 lows, the counter is still holding on to the trend. I agree on that, but the momentum is missing. So if someone is already holding this position, I think with the stop of 17.5, one can continue holding it. But if someone has not created position, I think one should avoid this counter for now. Once the short term and the medium term trends also turn positive, I think that can be good level to initiate buy on Yes Bank with the momentum as well as the long term approach. But for now, it's an avoid. If someone is already holding, 17.5 can be good stop on this.
Okay, all right. Let's move on to another viewer query. Well, Movies has been asking the view on Sangvi Movers. He's bought it at 500 odd levels. How does the stock look like on the charts, Kunal? Because now it is, around the 300 odd levels. What can we expect in the near term?
In fact, Sangvi Mo is now near to 245 and it's looking honestly very scary.
245.
It's a
Yes,
very,
my bad.
yeah, 245, and that's absolutely downtrend counter. I mean, there's no nearest support even on the weekly chart. So the only support which I can see is near 220 mark, nothing before that. So yeah, it's a clear exit for now. And if you buy any chance, if you exit and if the counter reverses, then the level to reinitiate the buy can be, I think, 270 mark. Keep that level in mind and try to exit on the bounce if at all you get any.
All right, all right. Just one last question before we let you go. Kunal, what are your top bets at this hour? We have the budget, we have the US Fed rate decision due later this week as well.
See, absolutely. In spite of these events, there are always good opportunities from a long-term and favorable risk-reward point of view. So the first is a TCS. I think that counter is right near to the support in the entire IT basket. This counter is only counter which is offering such kind of risk-reward. So considering the stop of 4,050, one can initiate a buy. The immediate target can be 4,300. Mind you, no need to exit near target. Keep trailing the stop loss and enjoy the rally if at all it emerges well. The second is Valiant Organics. Now, this counter is again near to the extreme low levels itself, nothing left on the lower side. This counter is down by around 50-60% from the highs, even more. And near to the support. So with the stop of 300 on the closing basis, one can initiate a buy, though it's a risky bet because we are trying to capture the bottom. So stop loss can be 300 on the closing basis, targets can be 325. And the third is Hindustan Unilever, as I already mentioned, near to the consolidation levels, nothing left much on the lower side. 2,300 can be good stop on this. And this can be the present level of 2400 can be good level to initiate buy. Immediate targets can be 2550, positional targets are 2750. So these are the three counters to watch out from mid to long term point of view.
Okay, all right. Thank you, Kunal. Thank you for patiently answering our viewer queries, and thank you so much for your time. Hope for that we connect with you
Absolutely,
soon.
my pleasure. Thank you so much.
All right. Let's quickly take a check of the markets at this point of time. Well, the Sensex is down about 400 points. We did begin by 500 points downside, but now it has come off its day's low, but it is still down about 400 points at this point of time. Nifty is also down by 100 points, below that 23,000 levels. If you look at some of the sectoral indices, all of them have been trading in the red. Apart from the Nifty Realty Index, well, definitely DLF and Macrotech developers have been, lending some support to the Realty Index as well, and they have been doing well at this point of time. DLF and Macrotech, both of them, DLF especially up about 2% following its Q3 results as well. If you look at some of the sectoral indices which have been not doing well, that is your Nifty Media and Nifty Metal Index, seeing a very sharp cut of about 2% at this point of time. On the other hand, if you look at the mid cap and small cap indices, both of them, seeing a sharp cut. Mid caps down about 1%, 1.5%, and even small caps is down about nearly 3% at this point of time. So small caps seeing a larger selling pressure in this volatile market. If you look at some of the top gainers on the Nifty 50, that include the likes of Britannia, HUL, ICICI Bank, Dr. Reddy's, ITC, all of them doing well at this point. Top losers on the Nifty 50 include the likes of JSW Steel, Bharat Electronics, IndusInd Bank. Well, IndusInd Bank will be reporting its Q3 results later in the week as well. JSW Steel seeing a sharp cut of about 3% following its Q3 results. Hindalco also not doing well on the charts, 1.5% cut coming in. NTPC also seeing a cut of about 1.5%. So yes, overall we are starting off with a weak market. Well, global handover was also not very much exciting. US futures were down, and Trump's tariff rhetoric has also been one of the watch out for the investors as well. So with that, we have come to an end of this edition of the Opening Bell. Don't forget to tune in at 3:30 p.m. for Closing Bell. We will be discussing about how the market is developed, what the stocks are in focus. Until then, signing off, stay tuned to moneycontrol.com for all the news updates and market insights.